Well, we'll get started today. And Kelley, thank you so much for coming and doing this. So today's speaker is Kelley Lynch, and she is the Chief Financial Officer and Vice President of Operations at Othot. With more than 25 years of experience in financial management and operations, she has made significant contributions to the expansion, development, and fiscal security of business in the technology, pharmaceutical services, manufacturing, and engineering industries. Prior to joining Othot, Lynch worked in C-suite and senior level positions in several progressive, fast-growing companies, including Careform, C-leveled, Taggart Global, and Respironics, overseeing finance, accounting, and human resources, customer service, and a variety of corporate projects. Her strong and effective communication and collaboration skills have helped shape the positions many organizations for success. Kelley earned an MBA from Carnegie Mellon University's Tepper School of Business and her undergraduate degree in finance from Penn State University, where she serves as the president-elect of the Penn State Alumni Association Council. So Kelley, I'll let you get started.
All right, thank you. Thank you all for being here. I am going to share my screen, but as Allison said, this is my first kind of lecture. Obviously, we've all been doing a million Zooms, so I know the chat function. But if I don't see your chat question, please raise your hand and kind of shout it out, because this is meant for you. So I want to make sure that each of you is getting everything you want out of this course today. So I'm going to share my screen here. And sure. Okay. All right. So, yep. And I'm already off. Hold on. Why is this? And there we go. That's the importance of cash flow. So I appreciate all of you being here today. The focus today, as most of you know, obviously because you signed up, is the importance of cash flow. Back when I went, we had a professor, Dr. Richard Green. Unfortunately, he passed away a few years ago. But his big saying was always, debt is good. Well, I kind of co-opted it, and to me, cash is good. And I think if anyone has lived through, especially the last 12 months, everyone has learned this little lesson quite clearly. So interestingly, this is, I think, my third or fourth year working with the Short Center on this, and hopefully this year more than almost any other year, it's becoming a little more obvious why having capital and having cash and understanding your cash flow is extremely important. So Allison, and I apologize for the Lynch part. I forwarded we're redoing our websites. We actually just redid our bios, so I hit forward on it and didn't really make any change. So she shared with you a little bit about my company. And just so you know, and Allison, I should have told you, the company's called Othot. And when I was interviewing, I said it wrong too. I was like Othot. I was coming up with different names, but it was meant for original thought. But I've been at the company there for just over 2 years. And as she said, I've worked with numerous companies of different sizes. This is probably the smallest company that I've worked with, all the way up to about 500 million in revenue on the international. Other than PPG right out of college. Right out of college was PPG. Obviously, that was huge. Primarily, I've been a CFO, but I've also was a director of customer service, customer satisfaction, a lot of experience with HR and IT also, and some marketing underneath. So a variety of everything. I call myself an operational CFO as opposed to more of someone who came through the audit field. As I mentioned, I want this presentation to be interactive. Obviously, there'll be plenty of time at the end for any questions, but I also want to make sure that as we go through this process that you're asking questions. So also the one thing that I want to do to start with, and so pardon me as I get closer because I'm going to type some of these. I'm going to make you guys first share with me, why did you sign up for this today? What are you hoping for the takeaways? I just want to get this so I can kind of keep it off on the side, so that I can be making sure that I'm emphasizing areas of specific interest for you. And then at the end, we'll come back to make sure that I've answered or at least addressed each of the kind of the main areas that you guys wanted to talk about. So I'm gonna open it up that you can kind of shout out again, why are you attending? What is it that you hope to learn? what are you trying to get as a takeaway from today's session? Anybody? Come on, show your pictures, show your faces, come off mute. I've been doing this for a year now. Let's go.
So I actually wrote something in the cache or in the chat already, but it seems that you prefer that we speak. I'm contemplating starting 1 to 2 companies, and obviously having a cash flow and being self-sustainable is of high importance. So this talk should be right spot on.
If I have any spelling, well, I'm not. I need the red, the blues, and the green, red squiggles. Yeah, I can't. I think the way I have it on this, I can't actually see the chat. So if you can shout it out, that would be great. If there's anything else that you guys wanted me to focus on or make sure I touched upon.
Yeah, I think once you are a presenter, it completely changes the menu, and you have like the little menu, but if you click like on 3 dots, it's somewhere hidden, and there is a chat there.
Yeah,
but
you're right. You're right. Thank you.
You need to
I
hunt
think I
for
would
it.
know that by now, but yep, you're right. There it is. Thank you.
Yeah. Yeah, they could use some UX help at Zoom.
Right. Anybody else? All right. Well, we'll get moving. And again, as we go through this, I encourage you to, again, raise your hand. Now I see where I can see if there's a chat. All right. So the question is why, when I was, a few years ago, there was a couple of different topics that we were thinking about. And the reason why I chose cash management over we were looking at some exit processes and strategies. We can touch on that a little bit here. But the reality is you can't sell your company or bring in investors until you understand cash management. And, a lot of times what we talk, when you hear about, especially when you're growing companies, you want to grow profits, you want to grow your clicks. If you're SaaS, it's all about the subscriptions. Those things are all important. But one of the things that I learned, and both professionally and then if you read anything, is a lot of time that the fastest and best companies can go out of business because they don't have the capital and they don't have the cash. And so what I started doing years ago at a company that was growing extremely fast was really diving into cash management. And the reason why it is so important is that when you are talking to bankers, when you're talking to potential investors, and quite frankly, as you grow and you're trying to bring in executives, they want to understand and feel comfortable that you know your business, that you know the ins and outs. What are your customers doing? The timing of your vendors. What is the timing of your cash? Is it seasonal? What are the in and outs? And what I created, again, there's nothing hugely magical about what I've done. I'll be very honest, but it's what I call an operational cash flow. There's the statement of cash flows that we all learned in various accounting classes, but this is the operational. This is making sure you're understanding your business. And by doing, whether it's my cash flow, the process that I'm using specific, or you have your own, you will be able to give assurances to your board of directors, potential investors, and bankers that you know what you're doing. And once you set this up initially, in my opinion, it becomes very easy to maintain. And to this day, this is something I call, Cash Tuesday. Every Tuesday, I'm in my cash, like clockwork, making sure that I see and understand everything that's going on. So over the course of my career, I created my initial model back in 2008. And if any of you are old enough to remember what happened in 2008 and 2009, we had a fiscal financial crisis. And I had to create it because we had customers that were declaring bankruptcy and were hurting us. So we were doing the work, but we weren't getting paid. So obviously it's that trickle effect. So that company, I started it because we were running into bad issues. But after that, I was at a company, Care4, where we were over doubling revenue each year. When I started, we were at 25 employees. 2 years later, we were at 225 employees. So we were growing like gangbusters, which was great, but we did we did monthly billing, but it was different sizes. Some of the customers would pay late, pay early, but we were constantly hiring. So I had to manage cash to make sure that, you know, we were able to sustain our growth. I also worked with a company when I was at C-level. It was a 60-year-old, fourth generation, somewhat stable company, 20 million, so not huge. But even for them, they were trying to maybe get into some new business lines. They were trying to establish banking relationships. And oh, by the way, the family loved to take cash distributions. So we had to kind of pull some of this back so they could start their growth. So I've been able to adapt this model to almost any size company under any circumstance. And I will tell you, for this past year with COVID-19 and the worldwide pandemic, I was able to give great comfort to both our bankers and to our board with our cash flow forecast. In fact, that was something that went from a weekly, you know, early on in the pandemic, it was like a weekly report I had to give out to, it became just at the board meetings because they had such a high level of comfort at the forecast and what we were doing. And by doing that, then that alleviated everyone else to be able to worry about the product, about customers, about what they do best. And then left the cash to me. And therefore, I was able to also forecast when we might get into trouble, and we were able to plan out when we needed to do some raises. So I have a lot of experience in a lot of different size companies under various circumstances that I was able to apply, you know, this model to it, and it's been very successful. Just as a little data point, a year and a half ago, so like in October, November of 2019, for my company right now, I had forecasted that this month and next month is when we needed to kind of complete our next raise, and dead on, and we're finishing that up right now. So it was a tremendous help. So when we're doing a cash flow model, you don't start with cash. As many of you know, been involved at Tepper or wherever you went to school, or even any businesses you're starting, you have to start with a budget. You have to start with monthly preferable, because you can do annual when it's far out, and that's fine. But you really need to have at a minimum some type of a monthly budget. What is your revenue? Who are your new customers? Who are you hiring? What is your rent? You know, all the basic things that is building into a P&L. What's my revenue? What are the timing of all my expenses? That's step one, not even a question. Step one is you have to create that budget. Then once you have the budget, then you create a monthly cash flow that matches the budget. So obviously that's looking at timing. So for example, my current company, we build annually. So my cash flow is very lumpy, bumpy. It's kind of seasonal right now based on our biggest product. But our revenue is obviously monthly. So I may invoice someone for $100,000 and get it paid in May, but obviously my revenue is going to be recognized over the 12 months. So that's why you start with the budget. You then come up with the cash flow, doing that matching of when am I invoicing? When am I collecting? How long does it take to get collected? Then on the expenses, what is my payroll? When am I hiring? How often do I pay? What's my lease? What are other expenses? And tying them up. So you may straight line a lot of expenses, which is very common in budgeting, but when you then come to the cash flow, you really have to understand, though, when do I have to pay for this? Then once you develop the monthly cash flow, then what you really now need to do is start dividing it into down, and I'd stick with the 13-week cash flow. And the 13-week, how that came about was back in 2008. That's basically what the bank asked for. They wanted to understand what was my 3-month need for cash. What is my cash doing over the next 3 months? One, to make sure that we had some good insight. And two, we had a good insight into understanding any cash needs that the bank or investors might have to help us with. And that gave us a little bit of runway to be able to get cash in, because there's nothing worse than all of a sudden realizing you have payroll in 2 weeks and you don't have any money in your pocket, because that becomes a big issue. One, getting the cash, not saying that you can't get it, but it'd be pretty expensive. Or the alternative is if you have to tell employees that you're going to be late on payroll. And as many of you may know, that doesn't go over very well. So I create then, after you do the monthly, we then create a 13-week cash flow. So before I move on to kind of diving into the model, are there any other kind of high-level questions? Again, when we go in the model, we can go into a lot, more details, but I figure I'd take a breath here, throw it out there, see if there's any questions, anything people wanted to share.
I'm curious if you have any kind of simple templates that you would be open to sharing.
Yes, actually, what I have done is the model that I'll be presenting to you is a model, it's kind of fake numbers in there, and I am absolutely willing to share it.
Perfect, thank you.
Yep, and I think I had another question in here. Come on. Put my glasses on because it's so small. How do you account for credit when projecting cash needs? When you say credit, do you mean credit cards or do you mean debt? Or with Larry, what did you mean specifically when you meant for credit? It's typing. I'm going to move this over here. Oh, credit cards. I have that in here, so I will show you. That's actually a line item that we do that I do specifically have for credit cards. So we'll I'll highlight that when we get to that. Thank you. Thanks for that question, Larry. All right. So now, all right. So this is my model. Now, again, this is basic Excel. I will be honest. There are certain things that I'm looking at to try to change. There's nothing overly complicated or exciting in here. I will be very truthful, but I'm kind of a keep it simple, stupid person because you will have enough on your plate to be dealing with, with your business. And to this day, this Excel, the beauty of Excel is how easy it is to manipulate and to change and to customize to your own, circumstances. So you can see I thought there should be another tab in here. Why can't I see I hope I didn't delete the tab. That would be something that I would, oh wait, you know what? And it's the wrong one. Hold on. Give me 1 second. I apologize. I had 2 in here and I pulled up the wrong one. Here we go. Here we go. That was an old one. Here we go. There we go. Okay. So
actually we cannot see the Excel table, but the PowerPoint presentation.
Okay, thank you. I moved that over. Let me stop share and let me pull share up again. All right, am I good now?
Yes.
Okay, good. Thank you. Sorry about that. All right, so this is so you can see I have 3 tabs in here, and so what I'm going to start with is the very cash flow detail, and I'll go over it at a very high level, and then we can kind of drop into some specific ones. You can see I call it a 13-week cash flow, but what you can also see is like January and February, I have it as closed because saying that we're in March right now. So you can see right now I have March and April. Since we just closed, I am actually only showing 8 weeks. We have to, or no, here we go, and May. Here we go through May. And then you can see I have through the end of the year, the future months are just monthly. So usually then what happens is once we close a month, we then open up that 3rd month out to open it and start getting that populated. But you can see here that I do forecast the entire year for cash, and I'll quickly go to the scenarios. So what you will be able to see is I'm looking at the entire year from a cash flow to see kind of at the end of when I update this on the weekly basis, I then come here to see on my scenario. So this just gives me a high level snapshot. What you'll see then is I have my actuals, and up at the top here, I know some of the, again, this is all very simplistic, but when you're looking at things, for me, colors and signifiers to understand status is very easy for me. So, and it's primarily in invoicing, because that was also a lesson that I learned early on. I would put out when I would think to invoice, and I would see that I have cash coming in 4 weeks or 6 weeks. And then I would kind of find out, I would talk to my accountant. She's like, oh, no, I hadn't invoiced it yet. Well, if you haven't invoiced it yet, it's going to be a little hard for me to collect. So partly then what I added a few years, I mean, when I was early on, is kind of this whole color coding. Again, very simple, but what it's telling me is the status of anything. So you can see everything that I'm expecting to receive in the next 6 to 8 weeks is this orange color. To me, that means it's invoiced. We also are adding notes in here of when things are due. So that's just more from this FYI, nothing that you need to do. But this color coding for me helped to make sure that if I did not see anything color coded, one, that didn't necessarily mean it wasn't invoiced, but two, I needed to make sure that it was, because that was an early on mistake that I made, is when I would forecast, but then we would forget to invoice, and a customer is not going to pay you unless they have an invoice in hand. So you can see in the out months, it's kind of that gray. So this is just all forecasted. And down here, so this top part here, these are all my current customers. Obviously, I was too lazy to come up with fake names for customers, so they're getting 1, 2, 3, 4, 5. But you can see there's different dollar amounts, different amounts. You may have, for the most part, this is sticking with my annual, but you may have a customer here who gets paid, that pays you monthly. You may have something that's automatic through, we had a customer once that would be an automatic ACH at one point. It was a monthly invoice. So from a receipt, we right now do not receive any payments from credit cards because our cash flow is so, our cash payments is so large, I'm not willing to cut 3% off to do credit cards. But you may have a business that it's like a couple $100 every month, and it's just easier just to put it on an automatic credit card. So in here, I would still put it in here, and if it's automatic, maybe you create its own color or something else that says, these are automatic payments that I have set up. But what you might want to do is, like, you may have a note that that their credit card expires in October. So you might want to put a color code or something in here that says, you know, I got to reach out to that customer, 60 days early to make a change. But again, right now we do not take credit card from a payment, and that's mainly because of the size of our customer receipts. And for the most part, we do annual billings. We don't really do monthly, but this could easily be adaptable to put in. Another way you could do it is you could have, these are all your customers that paid by invoice. You could then have a section that says, here's all my customers that are paying by credit cards, or even have it on a separate tab, because if you get a ton of customers, what you might want to do, kind of like what I do with my payroll detail, is I have all that detail in a separate tab, and then I just take that bottom one, kind of that bottom value, and put it into here. But again, on the credit card payments, or if you're receiving credit card payments, you would definitely want to have a detailed spreadsheet, especially, and or a system that allows you to put in, so you can get minimum 60 to 90 day notice on when someone's credit card expires. So that's kind of on my cash revenues so I call it cash in, very exciting. So I have my customers, but then there's other ways that I might have cash coming in. Oh, and down here, if you're a SaaS company, you may have churn, you may have upsell, you may have cross-sell. So in your budgeting process, you may be budgeting different amounts for here that you would want to include in here for budgeting. So like we do, so in my churn, fortunately, we don't have a ton of churn, but we may have some, and I have it directly, maybe related to specific customers, or I put in here specifically related to what I'm expecting from a customer. Same thing with upsell and cross-sell. There may be some specific dollars in your budget or specific things in your forecast that you're expecting to hopefully sign. But you never want to forget, especially if you're in SaaS, you don't want to forget that churn number. In some companies that are large churn, meaning like they have 1,000 customers plus, they may budget on a monthly basis, say like 2% churn. You could easily then, basically say, add up everything in that, in your monthly column and to multiply it by the -2%. And therefore it comes out automatically within your cash flow. The other thing for us, for example, we have two accounts. We have an operating account, and then we have like a money market account. And that's when like we do our fundraising, or if we get any loans or any other outside, we may keep money in a separate account because it earns a little bit more interest, or you might have some other other flexibility by keeping it separate. So we're just showing cash in, cash out, because again, this is my operating. This is how much money I have to do in my checking account, if you will. So I'm tracking that. The other is you may have, we have miscellaneous deposits, miscellaneous refunds. You may have, on the negative side, if you put in a deposit for a, like if you're renting a new space, you might have to put some money in ahead of time to put in a safe. You may have some refunds due after you've moved, or due to any customer returns, or it could be just different things, miscellaneous. I'd have to look to see. I forget what I was thinking when I put that 35,000 in there, but we had there was a big number in there. You have bank fees that you have to account for. So look to see what are your monthly bank fees. So these are just kind of automatic. You have, again, I have new equity, I have new debt. I was just trying to show you that, you also want to be able to project out, when you're forecasting to do capital raises, or maybe you have some new debt that you have a line of credit set up, so you have that money coming in. And we can play around with this, and I'll do that when I get to scenarios. But I've put this in here in the various, in the various months based on when, I know I need cash coming in. So, so like I threw in I created a model to show that, we needed a large chunk of new equity coming in, might be later in the year. But so I basically go in and I look at what are all my possibilities of cash in. So therefore then on a monthly basis, I can calculate what cash is coming in. Then separately, and this is usually for other scenarios, I'm also calculating, what customers are coming in from kind of our base product. And that's mainly so that, because again, I get asked that a lot, so that I can understand, and there's a scenario tab that will go in so that I can see what am I getting from customers versus what am I getting from kind of investing in banking. So it's very simple. You can see there's nothing complicated in here, but what you can also see, it's going to force you to try to understand where is your cash coming from. Any questions about that? Again, not overly complicated, which is my whole point with this, because I know not everyone who starts businesses are accounting and finance people. So I try to make it so that anybody can understand this. All right, so then you have cash out. Well, like most companies, the largest cash out is related to payroll. And that's going to be probably pretty much any company, maybe unless you're in the real estate business or something like that, where you're buying large buildings or complexes. In most companies, especially most smaller startup, it's going to be your payroll. So you can see in here, I just have one line, but as I talked before, like about credit cards, I've created a separate file, or a separate tab rather, for my my payroll. And what I try to do is identify what are all the types of payroll or people that we have. So we might have hourly employees, you might have interns, you have salaried employees, and then you're going to have new hires. And basically trying to come up with what for the hourly people, what are their hourly rates, about how many hours are they working. You can see interns. We have interns that might be all year. You might have interns that are just during the summer. You have your current the current employees that are listed out, and you can see some have say we have current employees, but they weren't hired until later on in the year. So that's where you're seeing some blank spaces. I also have raises in here. So for example, if we forecasted out a 3% raise, I was able to build this straight in. In here, I'm just showing a monthly payroll. Obviously, if you do more, do it twice a month. You can obviously double this and increase it. I'm just showing an example of what a monthly payroll would be. And down below, I'm forecasting out, well, what are my new hires? And when are they coming? My yellow here, this is something, again, because I've already shared with you, I'm a visual person. This yellow to me tells me those people have been hired and or accepted offers. So those are good numbers. So what will happen is, for example, let's see, if later in the month, if I know I'm not hiring some people, and so therefore they're not going to get paid for another 2 months, I may push some things out. So this is, and then when I get into the month when they're hired, I move them up because they're actually here and they're employed. Then at the bottom, I take care of employer taxes. And this number here is then the number that goes to my cash flow detail. Now, some of these numbers are different because I have a note here, like this includes commission. So like in my forecasting, I may throw in, like if I'm expecting any commissions, we have salaries, and this is an actual month. So here we have the actuals that were paid out, and this is when taxes came out. So we had different amounts of taxes that would have to get paid. So usually you make your payroll, and then the taxes come later. But you can see then going forward in each of the months, I have just a flat out monthly amount that came from the tab before. So this allows me on this one to show, to just show one line, but when I'm managing it, I have all the details here. So if we decided to not hire a couple people, to push it out, and this is all done so that you're able to do some scenario planning. And if you need to do rebudgeting or reforecasting or some timing changes, you can do all of that in here, and then it will flow automatically into this amount, into this tab. So those are that's the biggest. So then down below here, then you have your vendor payments. And what I've done here is kind of identify a couple of ones that pretty much every company has. And then down below, I'm just calling things vendor 1, 2, 3, and 4, and just showing you different, we can talk about different types of vendors and the different ways I forecast. But you may have tax payments, you may have some state sales regulations. If you have debt, you probably have debt payments that you have to make. So you want to make sure those are scheduled out, principal and interest. Expense reports and travel. Obviously, we haven't had a lot of those because no one's traveling with COVID, but you'll see that I had that forecasted coming later in the year because we're hoping to be able to get to doing some trade shows and doing some traveling. Then you can also see, we're going back to credit cards, you see I have this credit card. So what I do on the credit cards, again, and that can be, I don't budget individual payments on credit cards. I basically look at kind of month over month what we're putting in. However, that is a very easy thing to do on a separate tab, just like I explained like before on, and like what we did with the payroll. If you have a bunch of vendors and you want to manage it, you would create another tab and put that on again. And all I'm trying to do is reduce that this one page isn't so long. So you might want to have another tab that has all your credit card payments. Now, one of the things that I do, I talked about early that I first do a budget, then I do my cash flow. Well, one of the things that I do after I finish doing my cash flow is I reconcile my budget and my cash flow to make sure that I have all my expenses and forecasted expenses and payroll from a total dollar amount cash out that I've incorporated. I tend to be less worried about if I have them in the right line. I just want to make sure I've identified that if I think I'm going to spend $3 million in expenses this year, that I have $3 million of cash going out. So between credit cards and kind of this miscellaneous, these are kind of my two cheats, if you will. These would be my plugs. So in other words, if I go into all my vendors down below, because these are big vendors that I know that I'm paying on a monthly basis, that I'm writing checks out, or there are automatic pays out of deducted. if I'm missing, say, $100,000, I'll either put its own line saying, you know, a miscellaneous forecast, or I'll make sure my credit card is covering it. But that's how it's worked for me. Because as you learn your business, you'll get the rhythm. I can tell you, for me, like this was my second year doing the budget. When I did the budget versus cash reconciliation, I think I was only between $10,000 and $15,000 off. So it wasn't significant. So I don't have a huge plug somewhere, but where I did put it was in the credit cards payments. Trade show recruiters. And then these are all my actual vendors, because when we do our budgeting, we have some detailed vendors, and you can see a lot of these are monthly payments, and you can see there's somewhat big cash payments out. So these are recurring. So these are ones that are easy to identify and easy to put in from a vendor. And these could be, you might have contractors, you're using Amazon, AWS, you know, Google Cloud, your rent, other utilities. You may have, like in our case, we use some, in our marketing group, we're using some PR firms. We use Zoom Info. There's a lot of software that we know that we pay on a monthly basis. That's what I'm forecasting out here. And so it's identified, and you can see the bold means it was paid. And we kind of have, it's hard, I don't know if you're able to see the kind of the difference in those colors, but like this pale gray, that means that's my forecast. And then my AP person, when she gets the actual bill in, she types in the actual bill and kind of changes the color. So this is telling me a lot of information. You can see down here, and I can tell you what this one here is. It's a light color. My marketing group, this is one of my plugs, but that's because they have a ton of vendors that they spend a lot of money on month over month. And so I kind of put a plug number in there. And then at the end of every month, we reconcile to see if she spent it all, or if I need to remove that amount at all. But that's something that has worked for us, because again, marketing is our biggest spender outside of people. And she's hiring different vendors and bringing in different people all the time. Again, this is an example of, I needed to make sure that I captured all marketing expenses throughout the year. So that's my cash out. So again, you can see there's nothing magical, nothing hard in here. You can see I have the months out forecasted, and this is also, I can tie to my budget. I have CapEx in here. So example, like, you know, we're thinking we might need new space, so maybe we need to buy some more, some furniture, or we're getting you might need a new marketing booth. So I also put, you know, some marketing expense, or I'm sorry, CapEx expense in here based on the budget. And some of those we may not know timing, but then as we learn timing, I would, you know, have that vendor, identified, and it would move up above. The other thing then we do on a weekly basis then, just to make sure we haven't missed anything, is we do a reconciliation so my accountant, every Monday, she goes in and she does a bank reconciliation comparing this to our actual bank accounts. Again, it's just to make sure nothing is missed. And the key thing, and we'll talk a little bit about this later, is it is weekly. Because if you start losing track of time, things just happen and things just build up. So this is something, and then I go in every week also, and we'll talk about, I'll show you the scenarios that I'm concentrating on, just to make sure, again, there's no surprises on my side. Then down below, and I won't spend a ton of time because everyone's will look different, but what I try to also do is, so this is my actual forecasting up here based on my current customers and my current budgeting forecast of people and hire, everything that I know is in my current budget. But also in my current budget are new customers. And so I put that down below. And the reason why I do that is because this is when, on my next tab that I'll share, I do a lot of scenario planning. It's because these are all new customers. You know, we got to win them. We got to get them. And so I list them down here what you'll see is that I may have cash coming in May. This March here, being off to the side, oh, yeah, I didn't do a very good job here of that over. I assume it's going to take 50 to 60 days to get paid from sign. So if I sign a contract in March, I don't expect to get it to be paid until May. And that may only be 5 weeks, but again, I tend to be, and it's good to be conservative. So you can see that, you know, I'm expecting that we're going to have 2 customers sign in March, and I'm expecting that money to come in May. I expect to be some commissions coming out of it, and then I expect a net. So this is my forecasted current. This is cash in. This is my cash in if I get all those customers to come in, customers to sign. And the reason why I do all of that is because, and this is a very simple scenario. Last year, as some of you may be able to imagine during COVID, my scenario was a lot longer because we were looking at a lot of ins and outs. If we needed to let people go, delay hiring, we had to push this out. So I had a lot of different scenarios. Right now, I'm doing it. It's very, very simple. And how I do it is because one of the first questions that a lot of times your board might be asking, or if you're an owner of your own company, is when is my cash running out? What's my kind of worst case scenario? So what I do, it was a worst case scenario right now, is what if no one else signs? What if I get no more customers? So I just keep everybody, but I get no new customers. When do I run out of cash? So in the scenario I created, I run out of cash, and I'm pretty tight in September, but in October, it's gone. And so what that's telling me is, you know, we're only in, what are we, in March? But if I'm saying I need money in September, you're going to want to start thinking about what if I don't sign any new customers? So you may not have to panic yet, but you want to start being prepared. Then remember that one line I showed with all my new customers signing. So I'm saying if all those 2 new customers sign, then this is what I bring in. And so I'm good with cash. So this is just scenario planning. And again, you can put in as much details as you want. For example, last year in scenario planning, I had the no new customers, but then I said, well, if we don't sign customers, I'm also going to not hire these 3 people. I may delay some of these expenses. You know, so I'll add some other lines in here, but like for right now, early in the year, because we're confident that we can make, you know, we should be able to sign everything we expect to. I'm only showing my worst case is if I don't sign anymore, and based on the debt that I expect to bring in and that the new equity that we are expecting to bring in, I'm going to run out of money. I could run out of money in October if we don't sign everyone. Then the other thing that I do from a scenario, and it's more for the board, is I'll look at what we had as a budget when I did my original cash flow. When I present my budget to the board, I also have to present a cash flow because again, they want to know, can this budget get us to, you know, are we good with it? Can we make it from a cash? And so I will compare where am I currently sitting versus the budget. So you can see there's ups and downs. And then what I'll do is off to the side is again, this is what I do every week. And so I'll keep adding like, oh, I delayed these hires, or this new customer got pushed out, or this thing happened, or maybe in this month it's, well, I didn't, you know, I had to borrow money, say in February. I don't think that was the case, but maybe I had to borrow money in February. And so I didn't want to borrow too much money because I was good with cash. Or in our case or in the case that I put it in here, customers paid early. So yay. I'm sorry, they didn't pay early. They're paying late, but I still had cash. So therefore, that's why I was big negative here compared to what I originally budgeted versus what's actually happening. So I've now been talking for like 15, 20 minutes and showing you what I believe is a very simple kind of cash model. But what I'm hoping you see is there's a lot of detail on here about your customers, or I mean about your company. So are there any questions on this?
Yeah, hello.
Hi.
Hi, I appreciate you sharing these tools. I recently installed and downloaded and installed QuickBooks on my machine. I'm wondering if what the names of these tools are and if they're present in QuickBooks.
No, this is my tool. No, this is something that I've been working on, and actually some things that I'm trying to look at to see if there are some things that can be downloaded back and forth. But right now, truthfully, this one right now is manual. I'm looking into see what I can be doing to make it not as manual, but this one right now, it's just simple Excel.
Okay. So when you say you wish it wasn't manual, are you talking about like syncing to your bank invoice or something like that?
Yeah. Oh, okay. I'm sorry for that. Yeah. So for the invoice, yes. What I mean is manual is all of these things coming into Excel. Like I'm not downloading any of this stuff from QuickBooks. Yeah. Within QuickBooks, right now, the company I'm at right now, we use QuickBooks also. So we obviously do the invoicing out of QuickBooks. We do monthly bank reconciliations between our bank and QuickBooks. This reconciliation is more like a checkbook one, because this one I'm doing weekly, because the difference between, because this is actual cash versus the bank reconciliation that you do between QuickBooks and your bank, that takes into account for outstanding checks. Whereas in here, the outstanding checks, that you may have, like, for example, like this, like some of these checks are out there, they're just not cashed yet. Whereas, like, see how this is bold? That's been cashed. That means that cleared our bank account. But like there might be other ones out there, like this 16,000. It's not cleared yet, but I know it's coming, and I know when it's coming. So out of QuickBooks, yes, we use those tools. Those automatic reconciliations. I just mean this here is a manual input. Hopefully someday it will not be, but right now it's a manual input.
Yeah, that makes sense. It seems like you'd want to see what checks you've given out,
Right.
so you wouldn't have any surprises when doing like future estimates and such. It seems like that's a good use case for this.
Yes, no, and that's exactly right, and that's why Katie, that's my accountant at Othot right now. Yes, so she has this open every day. So when she's doing checks, she's putting things in here, but she also then uses this, and how I use it, there's no lie, there's a double work, because she's obviously entering the invoices and everything into QuickBooks and having to cut a check. I'm not going to lie that she then has to then turn around and do this. But what this also does, and this is, I know for me, like 15 years ago, it's giving you comfort that you haven't missed anything, because things are in here. You're like, oh wait, that's coming. Oh wait, I forgot about that. Especially on the invoicing. That's where it's key, is on the invoicing, is to trigger, especially using QuickBooks, to make sure that you have those invoices in there going out. Because I'll be honest, I'd rather be late on paying a bill than on sending out an invoice.
Yeah.
Cool. Because vendor's going to reach out to you and say, hey, where's my, you forgot to pay this. Where a customer is never going to reach out and say, you forgot to invoice me.
Awesome. Thank you.
Yeah, absolutely.
Do you have any thoughts or suggestions which people in the company should have access to this information besides the founder and the finance person?
Yes. Okay, before I go on, just to make sure, since I messed up the last one, can you guys see the screen now that I'm back to the whatchamacallit, the presentation, or do I need to reshare? Let me reshare. I have a feeling I messed that up, just because with some of this, we talk about this. Yeah, so are you able to see this now?
No.
Not yet.
Sorry. I don't know what's going on here. All right. Share screen. You would think by now. Okay, now?
Yes.
Okay. All right. So right now, yeah, so because there's a lot of detail in there, especially when it comes to payroll, you really need to watch who you share that with. That scenario tab, I use that when I talk with my senior managers in total. So that's the tab. So I'm not sharing with them all the detail because I don't want to share the payroll information detail, quite frankly. If people want to see more of that other detail, a lot of times what I will do is create a separate Excel spreadsheet and do what I call a copy paste special, meaning I just freeze everything just so that they can see all of the details. So for right now, right, the CEO, I see it in my finance and accounting and my HR group. Well, the HR group really doesn't look at it that much. They don't really care. I mean, they don't need to, but I share it with my finance and accounting group. And like you said, the CEO, but I do that scenario planning. That's what I share with the board and with my senior managers on a more regular basis.
Wonderful, thank you. And I have actually one more question, and it's related to employee expenses and how they are captured. I worked with multiple startups in the past, and they used apps like Harvest or Expensify that let you capture receipts, and basically they are connected to some kind of central hub that employer can collect. So do you have any thoughts on this?
Yeah, so we use Expensify also. So people get paid by their expense reports in their payroll. So what will happen is, if you remember, I had a line in there that said, that had expense reports and travel. So I'll forecast those expenses. And then during the month, the actual month, it'll show up in payroll. And then we remove that extra expense within that month. So I keep it forecasted as a line for future months, but then in the actual month, it gets paid out of that payroll, just like commissions get paid out of payroll. So then the payroll line in the actual month will capture that. So yeah, we do use Expensify, and that comes to the accountant who prepares that, and then our payroll provider includes that.
Yeah, thank you. Do you have any logistics of checking employee expenses, whether they qualify, and who is doing it?
Yeah, so every manager has to approve. So when the Expensify comes in from any employee, our accountant then forwards it to that person's manager to approve for payment.
Thank you.
Yep. All right. Yeah, so I guess then the next, kind of talking about this very quickly, but again, please ask any questions as we finish up here. But as I talked about this, you need to maintain this. This has to be whether it's weekly, every other week, because that company that I talked about when I first created this, and we had a lot of customers declaring bankruptcy on us, we were in trouble. I mean, we were in trouble. So I had to create a forecast of who we were paying when, and we had to tell vendors, hey, you know what, I can't pay your whole amount this week. I'm putting you on $1,000 a week, or we're paying this X amount. They might not have liked those answers, but when I was living up to it and doing it every week, they liked that. And we developed a trust, and they knew what I was telling them was true. And the same with the bank, when I told them we were good or when I needed money, because you need to be transparent. Because one of the biggest things is, again, going back last year, is you have to establish good relationships with your investors, with your bankers, with your vendors. And how you do that is you do what you say you're going to do. You tell them what's happening, you tell them what's coming, even if it's bad news. No one likes to hear bad news, but trust me, they like hearing bad news 2 to 3 months before it happens than 24 hours, because you're messing them up. So they may not be happy at that time when they tell you that's, you're going to be struggling, but they will respect it and appreciate it, because you're turning around and helping them with their business on the vendor side, and on the banker side, you're helping them because you're their account. So that's why that's why when I say I'm in it every week, to this day I am. Oh, sometimes it's 15 minutes, so it's not a big deal, which is great. That's what you want. But if you kind of sit on it for a couple months, you may have some surprises. So that's the it's simple. It becomes very easy, to kind of do on the maintenance. And the last thing that I want, that I really wanted to talk about a little bit here is, when we talk about capital options, especially for companies, you have obviously organic, meaning you just get new customers. You dip into your savings, you use your own personal credit cards, you bring in investors, family, friends, private equity, you bring in banks. Is it debt versus equity? So all of this stuff, that's what you have to kind of take into consideration of what are all my options, what makes sense for me. And all of this is leading up to someday you probably doing an exit. And by you knowing all of this stuff and having all of this stuff in place, by having these relationships, by someone who's gone through many of these on both sides, trust me, if you have this stuff detailed, understood, and you know where all that backup is, you know where all your your customer contracts, your vendor contracts, the timing, the help and the ease that will add to going through any type of an exit and or an investor raise is monumental. Because in fact, when we were at Careform, when we sold that company, we were told a few months later, this was like their third or fourth add-on business. They told us by far we were the easiest one, even though we were the youngest company, but because we had all of our process and procedures, all of this in place. It made their, when they they look at what they call quality of earnings, meaning, is the P&L good? Is this cash flow good? It made their lives and the accountants' lives much easier because we had all of this stuff, this stuff in place. So that's kind of what I have. If are there any questions or any additional information or any comments, anything you would like to share? Again, this was this is your I'm here for you. This was for you guys to hopefully help you with companies you're working with or things that you're thinking about. So please, I'm willing to answer anything related to this or even anything kind of not specifically related to cash flow, but this stage of companies. Well, let me, so again, I welcome, I know there's feedback, we welcome feedback. I think this is an important topic. I'm, as you may or may not be able to tell, pretty passionate about the importance of cash. And hopefully you all are too, and hopefully my goal was to hopefully show you that cash flow management is not hard, but it takes work. It's detailed work, but it doesn't have to be hard. And again, you can see it's a somewhat simple spreadsheet that you can easily customize for your own needs.
Okay, thank you so much, Kelley, for doing this. And if we don't have any questions from anybody, thank you for coming.